What if Donald Trump just slipped a stealth Fed coin into every American baby's crib and no one rang the alarm? In 3 rapid moves, I'll show you how a feel-good $1,000 gift could hardwire total control over your cash, your credit, and your future freedom. Before we dive in, take a breath and pour that coffee. Today's story isn't cuddly, it's a blueprint. A newborn subsidy that quietly rewires the plumbing of money itself, turning the Federal Reserve from referee into the only referee and the only banker. Let's crack the code behind these so-called Trump accounts. Bank reserves, the electronic IOUs on the Fed's balance sheet, already meet every trait of a central bank digital currency: real-time visibility, instant toggles, and built-in track and trace. If every citizen held reserves directly, the Fed's liability would become America's retail money. Translate that: one switchboard, one ledger. Every swipe, transfer, or payroll hit flows through a single super server. That means instant freeze authority, automatic tax pulls, or AI-guided nudges that steer what you can buy. Soy latte, green lighted. Diesel for your pickup? Maybe not. Hidden in the One Big Beautiful Bill, Section 1, 10116, sets up a $1,000 account for every infant delivered after January 1st, 2025. Parents never apply. Treasury triggers enrollment. The Fed hosts the cash as a sub-account of the Treasury general account. Roughly 3 million births a year equal about $3 billion in fresh Fed liabilities, forced straight into a broad market index fund. That's fresh fuel poured onto an equity bubble already priced for perfection, while the same kids face record housing and tuition. Visualize the loop. Treasury sells bills, Fed buys with keystrokes, newborn account receives reserves, index ETF receives the buy order. Wall Street cheers, Washington scores a popularity win, and the Fed's grip on broad money ratchets tighter. History flash. Soviet Gazbank ran a monoledger. No community lenders, no regional balance sheets, just one book of truth. That let planners ration credit to allies, starve dissenters, and monitor every ruble in flight. Trump accounts don't intend that, but the architecture rhymes. Researchers at the Bank for International Settlements warn the same design risk today. Merge retail and reserve layers, and surveillance becomes trivial. Translation: the Fed could, by rule or emergency order, set spending limits, expiry dates, even carbon caps on every dollar. Hedge titans who sensed this early, think Bill Ackman or Dan Loeb, stacked GSE shares and crypto hedges in the same breath. Either the Fed dominates finance or Bitcoin drains the moat. Their books shout the trade: long forced flow assets, long freedom money hedges. Index fund giants skim fees off baby bonds, untouchable until adulthood. Underwriters pocket fat spreads on the Treasury paper that keeps the loop humming. Big tech salivates over API hooks into a government standard wallet rail. Control takes the wheel. Profit rides shotgun. Regional lenders lose deposits when dollars jump to Fed custody. Cash-heavy firms see every invoice lit up on a federal dashboard. Savers in old-school accounts inherit systemic risk without yield upside. Heads the Fed controls, tails inflation eats. Mortgage REITs and agency bond buyers face a second-order shock. If every liability migrates to Washington's master ledger, the implied guarantee on Fannie and Freddie turns fuzzy. Risk spreads widen, mortgage coupons climb, and your 30-year fixed gets heavier. Foreign reserve managers notice. Tokyo, Beijing, Gulf funds now soak up agency bonds as quasi-treasuries. Blur that backstop and they demand extra yield, pressuring U.S. housing and the greenback in one stroke. $1,000 today buys tomorrow's silence. Government largesse often conceals a deeper trade. Sovereignty flows upward, choice trickles down. The ledger may open with infants, but feature creep is fertile, expanding to veterans aid, social security rails, small business lifelines. Remember the 2020 relief cards, reloadable debit rails that soften the ground for direct federal payouts. Trump accounts mark the shift from one-time stimulus to cradle-to-custody control, normalizing Fed wallets ahead of the next crisis that demands mass adoption. Your playbook: 4 shields. Diversify custody. Keep working capital at a community lender, plus self-custody, BTC, or gold. Audit bills. Search for automatic account, retail reserve access, FedNow wallet and draft laws. Monitor Fed sandboxes. Each API beta blurs public-private lines. Vote with capital, back firms, pushing open ledger norms, not closed gates. Watch mega cap weightings tied to mandatory index flow. Expect chronic bid pressure each tax year as newborn deposits settle. Brace for volatility spikes if Congress caps the scheme or if foreign holders dump agency bonds. Bond desks should price wider tails. A shift from quasi-sovereign mortgage paper to full credit risk asset can lift 10-year yields by 20 to 40 basis points without Fed repression. Echoes spread to corporates, commercial real estate refis, and equity risk premia. U.S. leaders frame the move as pro-family and pro-market. Beijing reads it as a dollar network upgrade, tightening Fed data reach over every cross-border deal touching U.S. ledgers. Moscow and Riyadh accelerate workaround efforts. Empire games never rest. Can a newborn consent to lifetime financial surveillance? Civil liberty groups say no, yet the bill defaults to opt out, not opt in. Expect court duels over Fourth Amendment scope once the first account freeze hits a teenager in 2040. Retail FedNow is live, linking banks to instant settlement. Add an on-chain ID layer, and the only missing gear for full CBDC rollout is a regulatory green light. The Trump account pilot supplies the social proof. Monoledger logic crushed innovation. Shadow barter thrived to dodge oversight. Expect similar gray markets, stablecoins, privacy tokens, even barter apps, if Americans lose transaction opacity. Underground premiums bloom wherever official money turns coercive. Advocates say direct Fed accounts kill overdraft fees, widen capital access, and speed disaster aid. True, but those gains can arrive via postal banking or narrow banks without gifting the Fed a panopticon. Efficiency isn't worth omnipotence. If this breakdown sharpened your lens, share it with one friend who still calls CBDCs conspiracy talk. Drop a comment. Will Trump accounts boost opportunity or undercut liberty? And smash subscribe. We decode money and influence every week so you can stay a step ahead. History rhymes. Power rebrands. Stay inquisitive.